Hi everybody, Alex Deployer from Expert Forex, and today we're going to be talking about a double in a day cheat. I hope you enjoy this video. And in this video we're going to be looking at a cheat for the double in a day trading, which has been around since August 2014, and I'm just going to look at our website. It's on our website, as you can see on the screen. There it is. It's under the double in a day course. It is cheat number 1, and we're going to be just looking at it in a little bit more detail. One of the problems with double in a day trading is that traders find the stop up tops too tight, too small, and more often than not the double in a day trades get stopped out very quickly because of the tightness of the double in a day stops. Now, one of our traders has thought out of the box and has found a way of increasing those double in a day stops, break-even stops, to the point that you could almost double the value of those stops. So let's have a look how it works. So the first step is to create a double in a day strategy, and what we're going to do in this example is we're going to go for 100 pip trend. We're going to go for 100% return or gain on our investment. This one is a bit aggressive. It's looking at a 4% risk to make 100% return, but let's go with that one. And we're topping up at 30, 40, and 50%. So there's our strategy. The trick with a strategy like this is to balance your margins of safety or your stops, and we have done that. Here you can see the margins of safety have been nicely balanced, 13, 14, 13, 13. So nicely balanced. Not big stops. 13 is quite a small stop after the initial stop, the first top up, second top up, and third top up. So quite a tricky strategy to get through. The price has to be moving pretty quickly towards the target and have very few retracements. So let's look at the other approach. So you still go for the next approach is to say, all right, we're going to do exactly the same thing, but instead of a 100 pip trend, we're going for a 200 pip trend. So you do a 200 pip trend, risking 4%. The stops in fact could be slightly faster. In other words, instead of 30%, you could go for 20%, 30%, and 40%. So you can increase that, but in this case, this example, we've kept the top up percentages the same. I would recommend a faster top up. And then if you look at the margin of safety calculations now, we see that the stop loss, the initial stop loss is now 28, the break even is 29, second top up break even is 27, and the third one 28. So a lot more room for the transaction to move, gives it more chance of succeeding. So what one would do is you'd start off trading the 200 pip trend target and keep on trading it until it reaches around about 100% or 100 pips, and then manually you would look at the transaction and say, oh, I'm happy with how far it's gone so far, I'm going to close all deals. So you won't get your 100%. Obviously you will get most probably 50% or even slightly less than 50%, depending on how your top-ups have gone, but you will have a much higher success rate than if you had gone with the original strategy that only gave you a 14 pip stop loss. So your success rate would increase, you'd gain a little bit less, but overall traders that are using this approach are getting much better overall results or overall successes because of the much bigger break-even stops that have come into play. So I hope this cheat is giving you some food for thought, and certainly it is worth doing. We've had a lot of people trying to do all kinds of things to reduce this risk of small break-even stops. People have tried hedging, they've tried all kinds of things. This is by far the best solution to increase the margin of safety or the break-even stops, give your transactions more room to succeed, and once you've topped up once, your transaction, remember, is totally risk-free, because if you're stopped out, it will be at break-even. Now the other argument is, why not just go for 50% gain, risk 4% to make 50% for your 100 pip trend. So there are the figures. We're still topping up at 30%, at 40%, and 50%. we're going with 4% risk, and we're going for 50% target on a 100 pip trend. And let's have a look at what the margin of safety works out to. So here we have them fairly balanced at 19, 19, 18, 18. Still an improvement on the case where we were going for 100% gain, but the 200% gain still is better because it gives you something in the region of 28 pip average margin of safety.
Thanks for watching this video. You can find links and more information about the video in the description. If you found it interesting, please like it and share it with your friends. Also remember to subscribe to our channel so that you don't miss any future Forex trading videos. So from me, Alex Deploy, cheerio.